Hey guys, this is Wooly from SportDayPanda.com. Today we're going to talk about maybe some tax planning. It's already Q4 of 2020. I've been reviewing some of my positions to see if there's anything I should get rid of in preparation for the filing of taxes for the year 2020. Unfortunately, there were some stocks that didn't quite make it. I gave it a chance. It's been maybe about a year or more, and unfortunately, they just haven't worked out. And I'm just gonna let them go. Some of them, like for example, there's a position called Jumia Technologies. They were supposed to be the Amazon of Africa. Unfortunately, it didn't work out as well as I hoped. So I'm just gonna maybe sell another round or two of covered calls just to see if maybe there's a chance that it might bounce a little, and just cut the loss, or maybe if I get really lucky, it might get close to break even. So for those type of positions, I think it's good to use them as a form of tax loss harvesting. I want to use that to offset some of the gains that I made in 2020 to reduce my overall tax bill. Someone had also mentioned to me offhand that they were thinking about if they need any type of special tax help. And it really depends on how much you made over the year. For example, if you made high six figures in profit or more, maybe some people have already hit in the millions already, and they're thinking of just cashing out and not worrying about it. And I don't blame them. If I were in that position where you're making millions, it's been a really great year for some people, and for those, I don't blame them if they wanted to cash out. In that case, you could probably get away with using just like any tax preparation software, such as Tax Cut or the product from Intuit, HR on a Block, or you could just take it to your local CPA and just be done with it. But for some others, they haven't quite made that much yet, but they're maybe interested in pursuing trading full time. And for those, I would recommend that you read Robert Greene's Trader Tax blog, and he also does webinars occasionally with interactive brokers and other trader related products and services. And he's been around for a while. He's I would say he's one of the trusted names in tax help for traders. I highly recommend it. I had purchased one of his tax guides a few years ago when I was very close to becoming a full-time trader, and I thought his step-by-step and the illustrated tax form guides were very helpful. And I want to just bring up two main concepts of trader tax status and 475 mark-to-market election. So the two separate things. The trader tax status is to help you qualify for business deductions, and I believe he recommends for some traders that you actually form LLC and elect S corp election for taxes, and that would further help you unlock health insurance deductions and retirement plan deductions. So that could be something to consider. Again, I fully urge you for these type of matters. Get good counsel. Get good CPA advice. You don't want to mess around with your taxes and and find out later that you might have owed or you made a mistake and you don't want to deal with that. So I would look to either Robert Greene or another competent CPA, or even better, like maybe another tax attorney for these type of matters. And 475 mark-to-market election, that helps with things of getting rid of wash sales. So if you're trading stocks, it's kind of annoying that you have to wait. I think it's 31 days or more, and then you can trade that stock again for short-term positions. And also for individuals, you're capped at a $3,000 capital loss. So for some people that could be really annoying, especially if you had a bad year and you can only deduct $3,000 for your income to reduce your tax liabilities. And 475 mark-to-market election helps with that. Again, I really strongly recommend for these type of matters, check out some of his blogs and some of his webinars. And again, I'm not have no affiliation with him. I just found him to be a very very straightforward, honest person that's actually a CPA, and he's been around for a while. I've also watched a few of his webinars, and I've actually seen him in some of the older trader expos. So I think he's a legitimate source for tax help for traders. And I'll leave information to his blog and some of his webinars in the description. If you guys want me to go over further any options trading material, please let me know in the comments section below. If you could help like and subscribe, that would be great. And thank you, and I'll see you in the next one. Bye bye. Oh, hey guys, sorry, I almost forgot to mention that for options traders specifically, we might not be able to qualify for trader tax status. It really depends on how many trades that you are able to make per year. I dug up some old notes from one of the Robert Greene tax webinars. You might want to check in with them. You can probably schedule a consultation with either him or one of his accountants to see if you qualify. But based on some of his old recordings, there was a tax case called POP versus the Commission, and it looks like the benchmark is around 720 trades, but that includes opening and closing trades. So based on that, Green thinks like if you make four transactions per day for 4 days a week, and then that works out to be 16 trades per week, 60 trades per month, and I'll get you to 720 trades per year. That might qualify you for trader tax status. So for example, if you open 2 Wheel of Fortune trades and then you close 2 Wheel of Fortune trades, that might be able to qualify you for trader tax status in terms of volume. And then another important note is your actual frequency. So that's like if you trade 4 to 5 times per week, and I think most traders do that anyway. That might make it a little bit easier for you to qualify. And then if you follow the tasty trade method of closing within 21 days of expiration, or 50% of the maximum credit received, that also might help your case for qualifying for trader tax status. Holding period, they recommend holding your trades for 31 days or less. But if you're following the tasty trade mechanics, you're gonna meet that just because you're usually closing your your short option trades within 21 days of expiration. So I think that could help your case. And then if you don't qualify, it's not the end of the world. Don't forget, it's more. I think it's more important for options traders or any traders in general to concentrate on your profitability first, and then worry about like tax implications and the business implications. If you want to do a LLC with S corp, or do you want to be a general partner, or etc. etc. I think it's more important to concentrate on your profitability first, and then if you happen to qualify, then that's great. But don't forget, like, you have to see if it's worth it or not. If you have to pay thousands and thousands of dollars to keep up an LLC, and then also additional accounting fees, you have to weigh that against your actual profits. So hope this helps. Hope you can like and subscribe if you found it useful, and then in the comment section let me know what other topics that you might find interesting. And thank you. I'll see you in the next one. Bye bye.